Multi-asset investing is the term du jour of our industry right now. When most asset managers talk about multi-asset, they're talking about managing balanced funds or client portfolios made up of separate asset class funds. That's the heritage of Russell Investments as well, but it's not what we mean when we talk about multi-asset investing today. Our definition is this. Multi-asset investing is the process of incorporating exposures to a globally diversified mix of asset classes and styles in a single, dynamically managed investment vehicle. This fundamentally changes what's possible in terms of return potential, volatility management, risk mitigation, and ultimately your investment outcome. Here are a couple examples of what I'm talking about. When we design a multi-asset fund, investors gain immediate access to not only traditional asset classes, but also to what I like to call the things in between. Less common investments that when we put together can add up to significant return-seeking or risk mitigation exposures. Things like infrastructure, currency hedging, REITs, bank loans, the possibilities are endless. These kinds of investments have rarely found their way into many client portfolios because institutional investors have limited time and resources. They all have day jobs, and they don't have time needed to investigate these opportunities, to educate their committees, looking at the impact to the investment policy, interviewing managers, and so on. They also may not have the portfolio size to enable the smaller allocations, something that isn't a constraint in a multi-asset framework. These hurdles keep many of the things in between out of most clients' portfolios. One of the beauties of investing in multi-asset fund is that you can benefit from some of the newest, more complex, and less mainstream investment strategies without having to incorporate them into the portfolio yourself. Multi-asset investing means having a real-time understanding of the return opportunities and risks across the entire portfolio right down to the security level. It also allows for a more holistic approach to spending the portfolio's fee budget, treating every dollar as a precious resource, going active where we think there's the most return potential for it, and using passive where we think there's less return available. Finally, multi-asset investing lets us manage portfolios in a fundamentally different manner. We still have access to the big levers. We can hire managers, we can fire managers, and we can shift portfolio weights around. But now, our multi-asset toolkit includes so much more. Derivatives such as futures and forwards and options, eliminating unintended bets, and gaining concentrated exposure when desired. We have all the tools we need to dynamically manage the fund on a daily basis and mitigate risk and help enhance returns. If this approach to multi-asset investing sounds interesting to you, we'd love to have a more in-depth conversation to answer any questions you may have. Thank you.